if you could change one thing, where your money goes first, and by doing that one thing, you can now recapture and keep all of that interest within your financial life for the rest of your life. How many of you think that this time today with me would be worth it? And so we want to start looking at the banks, right? If we want to become the bank, how do we start mimicking what the banks do? All right. Hey, what's up, everyone? Welcome to Wealth Webinar Wednesdays. My name's Stephen Nagy. I'll be hosting the show today. Chris Naugle and the team are all traveling up in Whistler, Canada. So I'm holding down the fort here, and we're going to have a good time. So appreciate all of you being on here live right now. Those of you watching the recording on YouTube, appreciate you all as well. And if anybody needs anything whatsoever, feel free to reach out to me anytime. Again, my name's Stephen Nagy. It's snagy at themoneymultiplier.com, snagy at privatemoneyclub.com, chrisnaugle.com, whatever email you have for me, they all work. I'm here to support and guide however I can. But today we're going to dive into one of my favorite financial strategies and favorite financial topics to talk about, which is the infinite banking concept and how to use it to become your own bank. And we're gonna have some fun today. We're gonna bring this. This isn't gonna be like the full presentation. I actually did a full presentation yesterday on Take Back Control Tuesday. So today's gonna be some similar points if you were on yesterday. So if you do need any clarification, anything like that, I'm here to answer your questions. But we're going to get into a little bit deeper topics when it comes to these policies, designs, why we do them, the way we do them. And like I said, I do want to make this interactive. So any questions that arise, we're going to hit those as we go here today. Now, just a quick words of wisdom. If you're on here for the first time or you're new to what we do, this is the good news is this is not a sales pitch in any way. I have nothing to sell you. This is purely just talking about financial strategies that we use in our own lives that help us change our lives, our clients' lives. Now, for many years, we've worked with thousands of clients all across the United States of America. And I have nothing to sell you. All I'm going to do is invite you to schedule a call with one of our expert money mentors. If you like what you're hearing, if you think this strategy might work for you in your life, we'll invite you to schedule a call with one of our money mentors. And guess what? They're not going to sell you anything either. So it's not a lead to a sales call, anything of that nature. Our team, our money mentors are here to help you create a banking system, if this makes sense for you, and guide you along the way. We get monetarily rewarded in other ways, and I will talk about that when we get to what this is all about. But we are very transparent, very forward facing. There's no bait and switch or hiding anything like that. So hopefully you all are okay with that. I'm very direct and to the point. So hopefully y'all are okay with that style if you're new here. All right, cool. So with that being said, guys, welcome to Wealth Webinar. This today is, like I said, focusing on the infinite banking concept and the why behind it, why we use this strategy, why we design the banking system the way we do, why we use the vehicle that we use to create this banking system, and why it can solve your money problems. But to answer Moni's question very directly, what we do here at the BYOB Money School is we teach people, we teach you how to take back control of your money and solve your money problem. That's it. And I'll show you over the next hour and a half here exactly how we do that. And we do that through alternative investments, alternative financial strategies, things that have been done for hundreds of years that are not taught in traditional means. So what we teach is typically stuff that a financial advisor won't do. And there's a number of reasons for that, including money, commissionable reasons. And I'll explain that. See, my background out of college, I was a financial advisor, fully licensed Series 766, variable annuity, life license, was working towards certifications and everything else. As a personal financial advisor, American Express Financial Advisors, as they were transitioning to become Ameriprise Financial in their own arm, breaking apart from American Express. This was back in like 2005, 6, 7 is when I was with them. And so I learned that traditional world of financial planning, financial advisors, stocks, investing, that whole world. And at one point, I decided to switch it up. So when I was during my career as a financial advisor, I enjoyed what I did. I enjoyed working with clients. I enjoyed meeting with people. I enjoyed talking about goals and planning and what we can do. What I didn't like was the advice that I was giving. And given I was very young at the time, I was in my 20s and I didn't really know any better. So going in, I just listened to what they told me to do. I would go repeat it. I would go out there and say it. My problem with the traditional way of financial advisors work and try to find is most of them are very captive. So they're going to push certain products and services that they are required to talk about. And this can be in relation to different mutual funds or different kinds of index funds that they offer, different kinds of stock investing, different kinds of annuities and insurance products. And typically they're really offering the higher commissionable stuff. And top of that, they want to keep your money. They want your money because they're making money off assets under management and the rest of it. But for me, just personally, just anecdotally speaking, as a financial advisor, what I did not love about it was basically, I would meet with somebody, and I used to keep a little book here that I used to use. Let me see if I have it in my drawer. Yeah, I have it right here. Check this out. I don't know if you can see this, but this is what we call a dream book. Okay, so this is my for my days at Ameriprise Financial. You see, this was back 2005, 2006 when this book was out, but I kept this all the years because it's a reminder of where I came from and where I've gone to with my journey of teaching financial education. So when you flip through this book, though, it's all about what are your dreams? What are your hopes? What does retirement look like? Now, I love this book because of that. And as we go here today, my goal for you is to open your mind. Open your mind to something different, something new, something that maybe you've never been taught before. And I want that to lead to you thinking about where am I financially? Where is my money? What is my money doing for me? And then where do I want to go in the future? Like, what does that look like for me? So that's what I loved about this book. And I should reprint these in a different way and start giving them out to people because it does give you a good vision, a good picture of where you want to be in the future. Now, the problem I had as a financial advisor, however, was that I would meet with clients and we would go through the dream book, and then I would have to bring them back to reality because very, very few people in this country are on the path to successfully retire at the age, the lifestyle, and the means that they want to. Okay, so when I would meet with financial planning clients, we'd build up their hopes and dreams, and then I'd yank it out from under them. Why? Because they were nowhere near where they needed to be for retirement. So then we'd have to have the hard conversations because there's only certain ways. We all have the same amount of time in a day. We all have the certain amount of resources available to us. Some of us know how to use those better than others, but it's all the same. So what we would need to do is we would need to talk about, okay, well, here's where you are today. Here's where you want to go. The only way to get there is to either drastically change the lifestyle that you live today, meaning spend a lot less so you can put away more for the future to be able to do what you want, or you're going to have to take on more risk because if you want to be able to grow your money through investing to the point where you want to be on this path that you're at today, then you're going to have to take on a lot more risk because we got to get much higher returns, which means you could lose it all too. Or number three, you have to drastically change what retirement looks like for you. So instead of all the hopes and dreams of traveling the world and visiting family and providing, money to your children and all the rest of it, you can't do that. You're going to have just enough to barely survive and be able to, pay for your everyday life. Or you're going to have to push back retirement. You need more time to be able to retire the way that you want to. There's no other options. That's it. And, in the traditional world. And so I would have those conversations. And then one day I got invited to a real estate investing seminar. And I sat in a little room in a hotel ballroom and I listened to a real estate investor at the front of the room. And he was talking about real estate, investing, controlling your own path, entrepreneurship, all the advantages that come along with everything I just said. All right. And it started to click to me. I was sitting there in the room and I sat back and I started to think to myself, I was like, wait a minute, this makes a lot of sense. Like my clients that I'm currently working with as a financial advisor could take advantage of this. This could be very good for them, right? And then I started thinking, okay, what about my own life? Like I'm in my early 20s. I see what these financial advisors in my office that have been doing this for 20, 30 years. They live good lifestyles, but a lot of them were stressed out and divorced, working long hours, things like that. So I started looking, and as a young person with a lot with not a lot of responsibilities yet in life, I have the I guess the luck, the ability to be able to try something different. And so I sat there that day and I said, all right, well, I'm going to educate myself and I'm going to buy a program to teach me how to start doing real estate investing. And we went out there, I did it with my cousin, and we went out there and we started doing some wholesale deals. And then we got into some flip type properties. We started holding on to properties and turning them into rentals. And then from there, I decided I had an offer to be able to actually go travel the country and start teaching real estate investing. Again, mid 20s, no responsibilities, came from a little small town in Christiansburg, Virginia, in the middle of nowhere, where I didn't really get to travel much as a kid and things like that. I was like, hey, this is awesome. I can go share what I'm doing. I can keep doing real estate investing. I can travel the country. I can have some fun doing it. I can continue to learn. I can continue to get better. And I made the decision to do it. And so I quit my job at Ameriprise Financial. My bosses, couldn't believe it because it's most people that work that hard to get those licenses and make it through the first year or two of that business, most of them stick it out. And I said, hey, this is just, I think I found something better I like in life, and I went for it. And 15 or so years later, here's where we are today. And over the last 12, 13, 14, 15 years, I've had the incredible opportunity to meet, to work with, to partner with, to invest with just amazing people, build incredible connections all across the country. And each new thing I've done in the entrepreneurial world and in the investing world has led to something else and something better and something bigger and something new. And but you snowball it, right? And so you take what you learn, you take what you fail at, you take what your losses, you take all of that and you keep moving forward, you keep pushing forward. And that's what I've always done. And that led me to meeting Chris Naugle in 2019. So in 2019 is when we really started pushing and launching the Money School. We started out with MSTV. Well, first it was a live education company where we started traveling the country. Chris and I were actually in Orlando, Florida, when they made the announcement that they were shutting down the country for COVID in 2020, in March of 2020. So we said, all right, well, we can't travel anymore and do what we planned on doing. So we really started to focus on online and social media. And, fast forward to 2025. Today we have, of course, BYOB Money Multiplier. We have the money school. We have the private money club. And so what we do is we teach these alternative. I guess that's the very long answer to Moni's quick question there. But so we are not licensed financial advisors. We are licensed life insurance agents, which I'll explain why in just a moment. Which I had to go back and get that license because I had given it up back in 2007. But nonetheless, we are not licensed financial advisors. We're not CPAs. We're not accountants. But we have the network and we have our trusted referral partners that handle each one of those parts of your financial life. Because what we do is we look at your overall financial life and we talk strategy. But we don't do it for you. What we do is we empower you. We empower you to be able to go out there and do it yourself. And so when we start looking at where are we today, we really need to start thinking about money and opportunity. Because today, where's the stock market right now today, you guys? Does anybody follow the Dow Jones just as a quick example? Where are we right now at the Dow Jones? All right, I'm just looking at the chat box. Anybody's answering me there? Yeah, so we're at all-time highs right now, right? Or just about. I think we're at 43,000 this morning when I checked. All-time highs were about a month or two ago, around 45,000. And so, yeah, close to all-time highs. Yeah, and so what we want to do is we want to study history. And Chris does an amazing job with this. And if you've been on the YouTube channel or you followed any of our past webinars that we do, and by the way, we do 6 live webinars every single week for free. So if you like financial education and learning, which is so very important, head over to the link you see on the bottom of the screen right there, and you can register for all 6 of our live webinars free every single week. And this is all we talk about, different areas of financial opportunity and ways to save and things of that nature. And I'll get more to that in just a moment. And so we want to know where we are today so we know how to take advantage and create opportunities moving forward in the future. So when I started a wealth webinar today, I was playing a video that Chris just put on YouTube talking about the real estate market. So let me ask you this question, everyone. Is there opportunity in the real estate market today? What do you think? Yes or no? To make money in the real estate market. Is there opportunity? Real estate's all-time highs. Interest rates are up right now. Is there money to make money? Is there opportunity to make money in real estate, however, today? What do you think? All right. Yes, 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 yes. Sure. Listen, I agree with you 100%. But I'll say this, be very, very, very careful right now in real estate investing. If you would have asked me this question a year ago, for the previous 10, 12, 13 years, you could have been a brand new investor, basically gone out there, thrown a dart at a wall, wherever it hit, say, I'm going to buy that property, you can make money on it. Anybody, everybody made a lot of money on real estate over the last 10, 12, 13, 14 years. Guess what's happened over the last year or so? It's gotten tight. The banks have restricted. The supply started to go up. Prices have leveled out and started to come down in certain areas. Things are sitting on the market longer, creating higher holding costs and expenses for investors. So things have really tightened up. You know, I'm in real estate every single day. I look at it, I evaluate it, I'm watching it, I'm involved in it every single day. So all over the country as well. So I see what's going on. I see what deals are taking a lot longer, what deals are going bad, what deals are not happening right now. And it's more so than I've ever seen since 2008. And it seems to be getting worse and worse every day. So is there money in real estate right now? Absolutely. But you really have to be in the right spaces. You know, because when you say real estate investing, what does that really mean? I mean, there's so many aspects of real estate, right? There's everything from mobile homes, little individual mobile homes, to huge mobile home parks. There's apartment complexes, single family homes, duplexes, quadplexes, development, mini homes, land development, flipping land itself quickly, flipping land slowly. Like there's so many different aspects of real estate investing. We're not even talking about the commercial market. And so, you know, we want to be in the right place, in the right areas with the right type of deal right now. So just a word of caution for that. And if you're on the passive side, if you're on the private lender side of things, those of you that are in the private money club, for example, really make sure you're doing a lot of due diligence. You're really vetting the person that you're lending the money to, the borrowers, things like that, because it's a tough market right now. Now, with that being said, if we see a correction over the next year, two, if we see prices drop even half of what they did in 2008, is there opportunity then? Yes or no? Absolutely, right? And that's what we're talking about a lot today. Because what happens is people tend to be very reactionary. And that's why when you see the stock market start to dump, a lot of times it really crashes. Why? Because people have emotions, they get scared, and they sell at the wrong time. They sell when the market's down instead of doing what Warren Buffett says, which is buy low, sell high, and don't lose money. But human beings, because of the creatures that we are very emotional and fearful, and we end up selling at the wrong times. And so when we're looking at where we are today, we need to understand what's coming. So we need to start positioning ourselves. Where's our money? Where are our investments? Where's my cash? How can I leverage money? How can I prepare? Because guess when more millionaires and billionaires are created than any other time in history? It's times of downturns in markets. And you guys can go research and study this stuff as well. I'm just going to tell you the way it is. More millionaires and billionaires are created during downturns, during economic tough times, during recessions than any other time in history. So if we, and a lot of economists, a lot of these big, huge firms are saying right now, we probably have a recession coming at some point. We're going to see a downturn. So if we think it's coming, what should we all be doing right now? Preparing for it, right? And so we need to start talking about that. And that's why we're going to dig into this today, because on the other side of the coin, we don't want to just pull all of our money out and wait and let it sit in cash, because we're also dealing with things like inflation and other wealth killers. In fact, let me pull that up right now. We'll talk a little bit about that because it's very, very important. Very, very important. So we talk about why aren't more people successful, the wealth killers. This is what I found. And if you have anything to add to this list, I'd love to hear it. This is just a list I've put together personally over the last 15 years of why I've seen why people struggle financially, especially for the future. Okay. And remember, there's a big difference in something like a job, owning a business, ways that we actively earn income, as our primary source of income. That's not what I'm talking about. Okay. I had somebody on yesterday and they're like, can I use this strategy to make a bunch of money so I can start investing with it in the future? No, this is not a business opportunity. This is not a network marketing opportunity. In fact, I would recommend if you're struggling financially and you've already watched our trainings with Craig and you've started to budget, you started to, eliminate some of the crap debt that you have and things like that, and you're still struggling financially, you can't make more money at work. Maybe you're stuck in a salary position or an hourly position. You can't work overtime, you can't do any of that. A lot of people turn to a second job. Maybe they go bartend or wait tables or do something on the weekends or the evenings, whatever the case might be. That's great. You got to go out there and hustle, all right? Because you need to generate income and enough money where we can then move that money. I'll show you an alternative to that today, ways we can flow our money first through these policies with our banking system. But I understand it's tough sometimes. So if you're in that situation, maybe you do need to generate more active income. Nothing wrong with that. We've all gone through it. I've done it multiple times in my life where I've had to go out there and do what needs to be done, multiple incomes, things like that. In fact, I feel like everyone should have multiple incomes. It just gets to a point where most of those multiple incomes should be passive, though. I'm talking active right now. So, those of you that are like that, I would highly suggest going and finding a network marketing company, a multi level marketing company. Why? Because you can get started with very, very little money out of pocket, usually a thousand, couple thousand, few $1,000s. You can have an active business up and running. It gives you a reason to go start an LLC, which you'll see my wealth killers here. Taxes. One of the top wealth killers is taxes. One of the ways to start avoiding paying as much taxes is to follow the tax code book. Get a good accountant that knows the tax code and knows how to be able to save you money on taxes. Well, one of the huge advantages in the United States is if you have a company, you have a business, it allows you to write a lot of things off. And that simply means you're not giving the government your money, you're keeping more of your money and using it in your life to generate more money yourself. All right. And so these network marketing companies, they give us a lot of advantages, but also they teach us. Okay. So a lot of them are very big on positive mindset. And I'm going to talk about that in just a second. They're very big on training. So if you are not great at communication or sales or, something like that, where you need to be better to be able to go out there and hustle and make more money, they're going to teach you this stuff, usually free of charge, especially if you get a good leader within the network marketing company. So I'm a huge proponent of those for those reasons. And if you do things, you follow what they teach you, you will ultimately generate some additional income. And then you can use that income to go do all this other stuff that we talk about. So taxes are a huge wealth killer, and these are some different ways that you can start avoiding those. And if you're looking for a good tax person, somebody to set you up with a company, maybe you need some asset protection, something like that, just shoot me an email and I'll connect you with one of our trusted referral partners. So I'll just put my email in here a couple times today, but it's snaggy@chrisnaugle.com. Okay. snaggy@chrisnaugle.com. So if you need anything today that I'm talking about, or just want to follow up with me, request anything, shoot me an email and I will hook you up. Okay. All right, so let's keep talking about these wealth killers because I think this stuff's so important. Number two, inflation. Inflation, everybody knows what it is now. It was huge over the last several years with the highest inflation of my lifetime just a couple of years ago. What's the biggest problem with inflation, though? We've got it back under control for the most part now. It's 2.5, something like that, which the target goal for the Federal Reserve is 2% year over year inflation. So we're right back down almost to 2%, which is great. But what's the bad news in that? Well, the bad news is that over the last, I don't know, 3, 4 years, inflation was up over what, 20% over that time period. So that means prices of things went up, let's just say 20%. Did those prices come back down? For the most part, no. For the most part, when all these prices went, now there's anecdotal things like eggs and some of these little things, but for the most part, prices went up on the things that we buy in our everyday lives, and they have not come back down. And that includes real estate. Real estate is very unaffordable right now, and so Inflation is a big problem. And, Mr. Diamond just said in the chat box, inflation is created by those in power. Absolutely. Absolutely. Agree with that 100%. So what does that mean for us though? That means, hey, we can't fight those people in power. Sure, we can vote people in and out and things like that, but they all seem to be the same blob. So what do we do ourselves? And actually, that brings up a good point I did want to mention, just a real quick side rant. Politics and what goes on every single day with politics in the news is a complete waste of time for most people to pay attention to and follow. It's a wasted space in our brains that you should not focus on. If you're in the position where you're like, I need to hustle, do something different, I need to get myself in a better position financially, I don't have time to do anything else right now, you're struggling to get by, stuff like that. Stop watching TV, stop watching the news, stop watching social media, stop all of it. You have to right now. It's draining the one precious thing you have, which is mind space and time. You got to stop, okay? Now, I spend time watching the news and reading articles and white papers and studying this stuff and following politics. Why? Because I'm at the level where this stuff truly does affect what I do in my everyday life. And I need to be able to understand it so I can share it with you guys on our shows like What the F, like we did this morning. So I'm at a point. But guess what I did 10, 15 years ago when I was building and I was going hard and I was getting myself in a position where I could be where I want to be. Guess what? I didn't watch any of that stuff. I didn't watch the news. I could barely tell you who the vice president was back then. Like, no clue. Because why? It didn't affect my life. It didn't matter yet. Sure, maybe at election time, I might try and figure out what's going on, but that's it. It's a waste of time because there's nothing we can do. It doesn't matter. So why spend our time on it, right? All right. So we want to forget about that. But inflation is controlled by the powers that be. But how can we control inflation within our own lives? Well, if we, like I said before, if we take our cash out of investments because we're scared the market's going to crash and we just stick it in a bank account, what's the problem? There's not a high enough rate of return, interest rate offered in bank accounts to keep up with inflation. So what does that mean? That means our dollar's losing money every year. Remember, the goal in life with investing with our wealth is not to lose money, it's to make more money. We want our dollars out there making more money for us at all times. So that way we're not trading time for dollars. Our dollars are making more dollars for us. And so what do we do about inflation? Well, one of the huge advantages of what we're talking about here today with the infinite banking concept. And again, I told you we're going to talk about the why behind a lot of this stuff. And that's why I'm getting into this because all of this why right here leads us into why all of us need to take the infinite banking concept, becoming your own bank, very, very seriously. Because if not, you're going to stuck with the 95% of people that are never able to achieve financial success in this country, especially at retirement age. So we need to do things a little bit differently. So when we are able to take our money, however, and put it into our own banking system with guaranteed, uninterrupted compounding growth and simultaneously be able to use that money at the same time, and that's exactly what this system does for us, well, guess what happens then? Now our money's compounding and growing for us, guaranteed at all times, and we don't have to worry as much about inflation. We don't need to worry about our money losing because we know it's in a place, it's in a vehicle where it's constantly growing. And then we take that money and we keep it moving. We keep it out there making more money. And that's how we don't worry about inflation within our lives. Volatility. Volatility. How many of you in 2008 lost a lot of money? Was anybody on right now that was retiring in 2008 and then could not retire, had to go back to work, or you knew somebody, maybe your parents, friends, anything like that? Anybody know anybody from 2008 like that? Anybody even in the last few years? How about with COVID 2020? The volatility we saw during that. Again, it's stuff that's out of our control. So how about that volatility? So if I'm at, and with volatility too, it's not even one of the things of, okay, well, the market fell 10%, it's going to come back. Well, guess what? If the market falls 10% and you gain 10% a year later, you're still down. Did you guys know that? It's called the drawdown effect. If you lose 20%, you got to make back like 25% just to get back to even. So we're already in a bad position. We start this volatility of these markets because every time it goes down, we have to make more just to get back to even. And then we give up the time it takes to get back to even. And on top of that, if you're at a position where you need that money right then, maybe retirement, something like that, and all of a sudden the markets are down, you can't any longer retire. And that's why most advisors, as people get closer to retirement age, they start getting more conservative with their investments because they want to try and avoid that volatility. And if your advisors aren't talking to you about that right now, it might be time to start thinking about finding a new advisor. And then interest. So this is one that I didn't learn about as a wealth killer until 2020. I had been talking about taxes, inflation, and volatility for 10 years, but I didn't learn about interest being a wealth killer until I learned about how much interest is truly bled out of our financial lives to the banks, to the financial institutions, to Bank of America and BMW and Toyota and Chase Banks and mortgages and everything else. And I'll show you an example of how interest gets bled out in just a moment. But when you look at it, you start actually tracking how much interest you're paying out in your everyday life. It's incredible. So let me ask you this one question. How many of you on here right now, if you could change one thing, where your money goes first, and by doing that one thing, you can now recapture and keep all of that interest within your financial life for the rest of your life. How many of you think that this time today with me would be worth it? Just that alone, that one thing right there. Absolutely, right? And so that's exactly what we're going to do. But before we get there, I have to hit on mindset also, because I can't tell you how many incredibly smart people I know. And do any of you know somebody like this? Incredibly smart people that just struggle financially. How many people you know that make great money but are still living paycheck to paycheck and have massive debt? How many people do you know that have, well, let me ask you this. I'll ask you, like not even people you know, you yourselves. Have any of you ever had $1 million idea? Do you know what I mean by that? Like maybe you're in the shower or laying in bed, driving down the road, whatever, and you think to yourself, you're like, hey, that would be a really cool idea. That'd be a cool thing that somebody needs, or this would really help me in my life. I wonder if that exists out there. And then you kind of forget about it, or maybe you like look into, you're like, ah, that'd be pretty cool. And then like, a few months later, a year later, a few years later, all of a sudden you see it on Shark Tank, or you see it on Amazon, or you see it on TV being advertised, or at the store, and you're like, holy shit, I had that idea. That was my idea. Has anybody ever had an idea like that? $1 million idea? Yeah, lots of times, right? Many times. I bet over half the people on here have had an idea like that. Well, what stopped you from being the one that put that out there into the world and making it your $1 million idea instead of somebody else's? What stopped you? Was it fear? Was it life? Was it because you didn't think you could do it because someone in your life told you you couldn't do it? When I was coaching one-on-one in the real estate investing space, I would meet with my coaching students. And do you know what their number one excuse was for not doing what I was instructing them to do to go out there and make money? Their number one excuse was that they were scared, not fear of doing it, but they were scared of what their family would think of them. They would literally tell me sometimes their spouse, sometimes their parents, sometimes it was just really good friends or like, they're kind of their extended family, things of that nature. And they'd say, Steven, listen, like I was all hyped up. I was doing all my research. I was getting ready to go look at these houses like you told me to do and start making phone calls. And my wife or my husband or my friend started laughing at me and told me, what makes you think you can do that? Like what makes you think you can go out there and make that kind of money like that? What makes you think you're going to go put that house under contract, you're going to flip the paper on it, wholesale the deal, and you're going to make $30,000 on it? Well, because it happens every single day. Like why not you? And so people have a lot of self-doubt, self-talk in their heads, and most of it's negative talk. So we have to start turning that around. You know, and fear, and these are legitimate excuses though. Listen, I'm not downplaying these at all. Like your inner brain, your inner mind is very, very powerful. They say if you think you can do it or you think you can't, you're right. Like it all starts with your mind and making that switch. But it's not a one-time switch though. Remember when I told you a second ago when I stopped watching the news, I stopped watching television, I stopped watching anything negative in my life? You know what I was doing? And I still do to this day? I was constantly reading, listening to positive audiobooks, listening to training audiobooks, listening to positive mindset things like The Secret, powerful stuff if you pound it into your mind and almost brainwash yourself back to being a positive person. There's so much negativity out there in this world. It's insane. We got to get that stuff out of our minds until we're at a place where our mind is so full of positivity and God and focus that we can start to let some of the negativity back in because we know it won't stick. It'll bounce just right back out. Does that make sense? And so I'm not downplaying this stuff at all because it's real. It leads to fear in real life, you know? But one of the things I wanted to mention, so last week, and this is a great example of fear that I dealt with just last week. So my wife and my son, we flew out to the Bahamas, okay? We were in what's called the Exumas. And the Exumas are a very remote little chain of islands, Cays, that they call them in the Bahamas. Not a lot of people live on these islands. The island we were staying on had, I think, like 6 or 10 gas-powered vehicles. Everything else was golf carts and people walking, bicycles. Not a lot of people there, though. Not a lot of tourists, not a lot of people at all. Many of the islands we went to, like Iguana Island, had no people. Pig Island, no people. You go for miles and miles and not see a single person. So we rented a little boat, a little Boston whaler. So the first day I get this boat and I'm looking around, you see nothing but open water that way, nothing but open water that way, not a lot of people anywhere to be seen. And I'm thinking to myself, I'm like, I've never been here before. This is a boat I'm renting. I don't even know anything about it. What if it breaks down? I was scared, okay? But guess what I did? I had a friend with me who also rented a boat. And my friend is essentially a boat captain, lives on boats every single day, knows exactly what he's doing. So him and his family and our friends were on that boat. So I said, hey, listen, we plan to stick together anyway. So I said, hey, listen, I'm going to follow you guys. We're going to stick together. We're going to go around today. And he had been there before. It was my first time. He had been there before last year. So he kind of knew some of the places to go. So I'm like, all right, so the first day I'm following right behind him. I didn't want to leave his sight. I'm worried. I'm scared. I'm going. I got my wife and my son. My son's 9 years old on the boat and I'm driving. I'm telling them, be careful, all this stuff. Why? Because I was scared. I was the fear of the unknown. I'd never done it before. And so the end of the first day, we had a great time, got a lay of the land, how to navigate the waters there, what's what, all that good stuff. So the second day, we go out. And I'm like, okay, listen, you guys can take off. We'll be right behind you. So we start going out on our own. About halfway through the day, I felt so comfortable. My son wanted to drive the boat, wanted to captain the boat. So I'm like, oh, so I'm scared again. I'm like, well, my son, 9 years old, so I let him. I'm like, here. And I'm like sitting right next to him. I'm like, almost wanting to control the gas and things. He's like, can I start doing that? I'm like, sure. So he starts doing it. I'm like, sitting back and I'm watching him and he's doing incredible. Like, my fear starts to fade away because it's not unknown anymore. Now I know what's going to happen. Now we can navigate the waters. I'm comfortable with the boat. I'm comfortable with my son captaining it. So the third and fourth days we're there, guess what? I'm sitting in the front of the boat. I'm letting him take it out. I'm not even worrying about anything. We're cruising around. It was a beautiful thing. No fear, no worries, nothing but pure joy. Why? Because I had somebody help me. I had somebody show me the way. I had somebody guide me along. I had somebody explain to me. And then I did all the same stuff with my son to where I was in a comfortable position. So fear is a very real thing. But and the reason I bring this up though, is because a lot of what we teach is new. It's scary. It's things that you've never done before in your life, maybe. This way of looking at money, looking at financial investing, looking at how money flows and these strategies. And so I'm not just teaching you the stuff and saying, hey, go do it on your own. I'm not just bringing you to the remote island in the middle of nowhere and dropping you off. We're bringing you to paradise. We're bringing you to this beautiful world of financial, strategies. And we're not dropping you off though. We're landing with you. We're getting in a boat with you. We're taking you by the hand with us to show you exactly what it is. Why? Because we've done all of this ourselves. See, nothing that we teach, nothing that we talk about is something that we have not done ourselves first. In fact, to be a part of our team, you have to have done this for a certain amount of time and have a certain amount of experience before we'll even consider having you on our team to share this stuff as well, right? And so that stuff's very, very important. And so when I talk about these strategies, just keep that in mind. We're not going to like get you started and throw you on your own. We're going to support you. We're going to be there for you. We're going to continue to educate you and be there anytime you need us. Call us, text us, email us. We're right there. This is all we do full time, all day, every single day. And remember, we don't charge for any of this because of the nature of how this system works. We are compensated through the companies that we create these vehicles with. And I'll get to that next. But I just want you guys to understand, we are here with you every single step of the way. So we're going to eliminate fear. We're going to eliminate all the life issues. We're going to eliminate, what everybody else is doing. And we're going to go on a path that we believe in, that we know is right and helps thousands of people all over the country. How do you start doing that? Like I said, you start listening to positive mindsets. I mean, this is one of my favorite quotes right here. The problem in America isn't so much what people don't know, it's what people think they know that just ain't so. Think about that for a minute. As we go for the next, I don't know, 45 minutes or so, think about that right there. All right, I want to dig into this, but I do want to give you guys a couple resources real fast. Is that all right? So start following the right people. Change your mindset, change the way you think. People like Brent Kessler, the founder of the Money Multiplier, incredible guy, has millions of dollars in investments, does everything that we teach, to a T. Brent is incredible at learning something, doing it himself, and then going out there and sharing it with other people and building companies around it. So definitely follow anything that you ever see Brent Kessler up to and his daughter Hannah now. I got to get Hannah on that picture now too. Hannah's kind of taking over the company for Brent, which is awesome. Chris, obviously my business partner, Chris, it's never about your actual resources. It's about how resourceful you can be. It's one of my other favorite quotes of all time right there. Chris, one of the hardest working guys I've ever met in my entire life. If you ever want to surround yourself with the right people, be at anything that Chris is at. And just the energy, the aura of Chris, it rubs off. And if you've ever been to one of our events, you could probably definitely back me and vouch for me on that one, right? Here's a couple books I would recommend. Anything around becoming your own banker, anything by R. Nelson Nash, anything by Robert Kiyosaki. I had the opportunity, I told you before I started traveling, doing real estate investment education. That was with Robert Kiyosaki, actually. So I had a chance to work with and travel a little bit with Robert. Just an unbelievable guy, the way he looks at things, looks at life, looks at money, looks at the world. I think he does a great job. But Rich Dad Poor Dad, highly recommend. The reason I have Second Chance on here is because he talks all about the infinite banking concept in this book, Second Chance. Anything by Tony Robbins, but he talks about the infinite banking concept in this book right here, Money Master the Game. Like I mentioned, Becoming Your Own Banker. Pick up these books, highly recommend them. Mapping Out the Millionaire Mystery. This is kind of an updated version of Becoming Your Own Banker that Chris and Brent wrote a few years ago. The Private Money Guide, Real Estate Investing. Start thinking about real estate investing, private lending, private borrowing. Another book that Chris wrote. Another one our team wrote was called, I think you guys might have already got that one for registering for today's webinar, but it's How to Get Back Every Dollar for Every Car You'll Ever Buy, Drive, and Own. Really, really cool book. So go to beyourownbank.com/S Nagy resources, Snaggy resources. And you can get the three, those are free books, just digital books. You can read them on your Kindle or on your computer. But just for being here, I wanted to hook you guys up with that. I just got that handy little link yesterday from my team, so I figured I'd use it here today. And one more time, if you do want to talk, I know people have to jump off early and things like that. We do have a team of expert money mentors. Again, they're all very experienced. They are all Nelson Nash Institute certified IBC practitioners. And I work with them myself and Chris and Brent. We work with them every single day, and Hannah every day. We do trainings every week. We have meetings every month, and they're very, very good at what they do. So I'll put the link in for that as well for anybody that would like to schedule a call with our team. Again, it's a free call. We're not going to sell you anything. We're here to solve your money problem. So if you do schedule that call, the only thing I ask is that you do watch the full 90-minute training first on infinite banking, because that's what we want to talk to you about on that call. Number two, bring your financial situation. So if you have debts, bring your debts with you. We're going to start talking to you about what that looks like and how to create a plan. Every single banking system that we build for somebody is unique and it's different. Every single one is different. There's not two banking systems we've ever created. We've done tens of thousands of them over the years that are the same. So everyone's unique. So you want to be very, very clear with our money mentors what you're trying to accomplish so we can build it perfectly for you. All right. All right, let's keep rolling through here, guys. All right, so of course, this is me and my family. This picture was back from like 2020, about 5 years ago. I told you my son is 9 years old now. He looks nothing like this now, but I keep this picture up here because it's just a reminder of how quickly time goes by. Do any of you have children? Do you have any have kids by chance? Maybe nieces, nephews, loved ones that are younger. They're incredible. They're just amazing little creatures, and how you can mold them and shape them and watch them grow. It happens so quickly though. And the older I get, it seems like the faster time goes and the more I realize stuff like this. And so, like I said, I keep that picture there. I don't age, right, guys? I look exactly the same, but the kids definitely do. And so Nicole, that's amazing. 7 children. Mike, 3 adult kids now. Chanel, 4 children. Absolutely beautiful. Wow, 19 foster kids. That's incredible. Joab, 4 young, 1 adult. Very beautiful, beautiful. But it's amazing, right? And then it seems like, as we get older and as our children start to grow, it's almost like more of what we do in life is for them. At least that's where I'm at right now. So a lot of stuff I do and plan, quite honestly, one of the reasons I'm not in Whistler, Canada right now with the rest of the team and with everybody is because I didn't want to leave my son for a week. My wife would have come with me, but I didn't want to leave my son for a week right now. We're having a great summer and I want to be here for him as much as I can. So it's a beautiful thing. And one of the amazing parts of what we do with this banking concept, with becoming your own bank and the infinite banking concept, one of the absolute cherry on top, which before kids I would have never even thought this way at all. But the cherry on top is inherently just by the way it's built, the vehicle that's used, it creates a legacy for our kids. Like it guaranteed, like there's no way for it not to happen. And so it does create that too for us, which to me is just absolutely amazing. It's that little cherry on top for everything that we do. So let's dive into this a little bit. Now, again, I'm not going to get into all the examples. So typically with a 90-minute presentation, and if you want to go back and watch that, it's on the YouTube channel. The one I did yesterday, the full 90-minute training on all of this was done yesterday. It'll be on YouTube on Sunday. But you can go on chrisnaugle.com, watch the 90-minute video, or if you schedule a call with our team, that link I just put up there, put it one more time. If you click on that link right there, I think at the bottom of it or over on the side or something, it says watch the 90-minute video. So you can click right there and watch the full thing. But in that video, we're going to show you 3 examples of how to use this. So those would be, if any of you have debt, does anybody have debt on here? Do you have any debt? So one of the examples that we show you using this concept, the infinite banking concept, is how to pay off your debt quicker while still building wealth. And so we give an example of a chiropractor where it would have taken him 19 years to pay off his debt. And he did it with us using this system within 6 years. And the entire time he was still building wealth for the future and creating a legacy for his family. So, 3.5 times faster while still having all those other advantages as well. Number two, the other example is how to stop that bleeding of interest. So I mentioned before, how we bleed out so much interest, and that's really one of the wealth killers. Well, one of the examples is how to buy cars and get back every dollar for every car you'll ever buy, drive, and own in the future. So if you want to see how to start, having your banking system basically pay for things for you for your various purchases, major purchases in life, go watch that 90-minute video. That's an example in there. And then, of course, how to use this system to really grow wealth and take your financial success to the next level. So, the example that I show, and actually, I'll show you this example right now because this does go down to, I'll show it to you in just a minute, but I'll show you how instead of making 12% on the same dollars, how by making that one change where your money goes first, you're making 44%. And instead of 12%, you're making 44%. You're not working any harder. You're not working any longer. You're not taking on any more risk in this example. It's just changed that one thing where your money goes first and you're earning 12% instead of, you're earning 44% that year instead of 12%. And each year, therefore, moving forward, it's going to be higher and higher and higher. And so I'll show you that example in just a minute, actually, because I do want to talk about building wealth while we're on here. All right. So that's what you're going to learn in the 90-minute presentation. But what I wanted to focus on today is the machine. Okay. Again, the marathon's going to be in the 90-minute. If we have time, I'll get to, like I said, the Millionaire. If not, go watch the 90-minute. But I want to talk about today the machine. What is the machine that we build this with? All right. So this is very simple. The machine is a dividend paying whole life insurance policy from a mutually owned insurance company. So that's right. So it's a whole life insurance policy. So I mentioned earlier, we are all licensed life insurance agents to be able to do this. The good news for you is that allows us to do what we do, provide support for life, to be there for you, to create this, hold your hand. It allows us to do all of that for free. Okay. And I'm going to explain all this because we get a lot of questions on this stuff. And I want to be very, very clear and very, very transparent and forward with everyone. Okay, so why do we use a life insurance policy to create this banking system? Okay. And help me out here. If you guys have been on before, let's list it over in the chat box. Why do we use a life insurance policy? Let's just start there. Why a life insurance policy? And then I'll get types of life insurance and why we do it and things like that. But why do we use a life insurance? What are some of the benefits of a life insurance policy to put money into it? See if anybody that's been on has been paying attention. Okay, we got some questions over to here. Also hit in just a moment. Okay, so it's a lifetime product, so to say. Absolutely, Dex. So when I start a whole life policy today, my health rating is locked in. My cost of insurance is locked in. So if I have a stroke in a few years, if I can no longer qualify for a policy, if I get very sick, whatever the case might be, it doesn't matter. My policy is locked in for life. They can't take it from me. They can't change my premiums or cost of insurance because something happened. I'm locked in for life. So it's a lifetime benefit. I could be 119 years old. That thing's still there for me. Okay. Johan said to recapture the interest you pay. So that's using the vehicle, Johan, but that's not life insurance in its own right. Because remember, this is not just a whole life insurance policy. This is a specially designed and engineered whole life policy built to become your own bank and use with the infinite banking concept. Now, I do want to make this caveat. This life insurance policy, the product, the vehicle that we use for this, is the least important part of what we do if you're using the right one. As long as it's whole life and as long as it's built halfway the right way, the more important aspect is the concept, how it's used. Okay. But it does, just like when you're building a house, you have to have a solid foundation. And that's why, even though the concept is more important, the product still matters, especially up front when it's first being designed. Okay, so let me just see what else are in the comments. Okay, Michael said tax benefits, 100%. Okay, so what he means by that is when we put our money into this whole life policy, the growth within that policy, which is why we go with a mutually owned dividend paying company. So let me explain that. I'll explain the tax benefits and growth. So when we start a whole life policy with a mutually owned insurance company, what that means is that we are a mutual owner now of that life insurance company. That's what a mutually owned life insurance company means. Just like a stock. When you buy a stock in a company, now you're an owner of that company, so to say, because you own equity stock in it. Same thing with these life insurance policies. When I start a life insurance policy, now I'm a mutual owner of that company. So what the life insurance companies do each year is they look at their profits and they say, okay, here's how much money we made, and we're going to give some of that money back in the form of a dividend. And the dividend goes to who? Owners of the company. Well, when you own a policy, you're now an owner of the company. So now you participate in that dividend that is paid out to policyholders. Okay. Now the dividend is not guaranteed. Okay. The dividend is not guaranteed. However, the insurance companies that we use, and we use 5 or 6 different companies, talk more about that in a second. The companies that we use have been paying out consistent dividends without ever missing a year for over 130 years. So while they're not guaranteed, we do bank on those continuing to be paid out. Why? Because we have a great relationship with these insurance companies and they tell us how they're doing financially. We go to annual meetings. So Chris was sitting in a room yesterday with one of the companies that we do a lot of business with, and he was listening to their lead economists within the organization talking about what they invest in, where their money is, what their portfolio looks like, the money they're making, where they're making it, all that stuff. Chris is sending me all these pictures of slides. So we're always looking at this. Guess what? These companies are doing incredibly well. And they always do incredibly well. They know how to manage money. Why? Because they can do it very slowly, very conservatively. And that's how these companies operate. So while that dividend is not guaranteed, it does get paid out every single year for over 130 years. And we plan on that continuing. Now, if the dividend was not paid out in that whole life policy in your contract, there is what's called a guarantee. So the insurance company, when you start the policy in your contract, they guarantee you that the money in your policy, that's called cash value. The cash value, this is how a life insurance policy works, or at least a whole life policy works. There's a few different buckets. You guys want me to explain this? Is everyone following? I know I'm not drawing this stuff, but you guys following though? Is this okay? So there's different buckets when it comes to a life insurance policy. And I'll show it to you in a, actually, let me show it to you in a picture. There. All right, here we go. So this will be better. Let's see if I can draw in it too. Okay. All right. So right here, we see this, the contract premium, right? Okay. So these are the different buckets on how a whole life insurance policy works. So the contract premium is the amount that you're able to put into the policy on an annual basis. Okay, so you can see this was a real policy. This was called an illustration. This was a policy that I started for a client a few years ago. She was a real estate investor out west. And so she wanted to put in $150,000 the first year. And then she wanted to put in up to $50,000 a year after that. Okay. And you'll see the amount drops down here. That's because of what's called MEC limits. So when we design one of these banking policies for somebody, we are working within limitations that the IRS and the government set. They're commonly known as the MEC limits, MEC, MEC, which stands for Modified Endowment Contract. Okay, so these are MEC limits. So when we design these policies, and all the MEC basically says is you need to have a certain amount of contract premium to support a certain amount of death benefit. And so when we build these policies to make them the most efficient for growth, which I'll talk about in just a second, which is this cash value over here, when we build one of these, we build it right up to that MEC limit. That's going to give you the most amount of growth and have the most efficient amount of growth with a smaller death benefit. Now, why do we do a smaller death benefit? Because the real cost involved in one of these policies is to buy that death benefit. You know, that's what that cherry on top, that's what this whole life policy is designed to do, is when you put money in regularly, and when you pass out, you're going to get a larger amount given to your beneficiaries. That's what a death benefit is and why people do these policies. However, we kind of build them backwards. We build them to put in as much money because most people want to put in as little amount of money for as much death benefit as possible. That's what a term life insurance policy is. And again, I did want to talk about different types of life insurance policies. So this is whole life. Term life insurance is typically going to be the cheapest. I could go get $1 million in death benefit for probably, I don't know, $100 a month or something like that right now. Very inexpensive. Okay. But term insurance, it's for a certain amount of time. So let's say I buy a 20-year term policy. Well, if I live 21 plus years, that term policy is gone. It never paid out. I put all that money into it and I never got the benefit from it. With whole life is for your entire life. So you could live to be 120 years old and pass away and the death benefit's going to pay out. So that's one of the big differences, but that's why term is cheap. That's why whole life. So most people, even with whole life, they want the lowest premium and the highest death benefit. We build these backwards. We want the highest amount of money going in and the lowest death benefit. Why? Because we want the lowest cost and the highest, most efficient amount of growth within the policy. I'll explain why in just a second. All right. So number one, we have this bucket, the premium. Now, because I do want to keep thinking about mindset, because again, the mindset is one of the most important parts about all this. We want to start thinking about this not as a premium. It is a premium, but we want to start thinking about it as a deposit. Why? Because a premium has a negative connotation around it, right? We think to ourselves, oh, I got to go out there and I got to pay my car insurance premium, or I got to pay my home, my house insurance premium, or whatever the case might be, my health insurance premium. It's fine. But again, this is a whole life policy, so it's a premium, but we are using this as a banking system, as a vehicle to run money through to take advantage of everything that a whole life policy does, that we'll come back to in a second, and be able to simultaneously use that money to go out there and do other stuff with it. All right. So I want you to start thinking of it as a deposit, because when you get a nice bonus at work or an investment pays off and you get a check back in the mail, are you excited to go deposit that back into the bank? Absolutely. You just made a bunch of money, right? Yeah, let's go. Same thing. I want you to look at it that way. All right. So again, let's just start changing our mindset. Look at this as a deposit. All right. Okay. So we have the contract premium. That's one bucket. We have the death benefit. That's kind of another bucket that we're watching. That's the cherry on top. And then we have what is called the cash value. Okay. The cash value over here. So as money goes into the policy, buys death benefit, and then it provides us with something called cash value. The cash value is the amount that you have available to use. And when I say use, the money comes out in the form of a loan. So what does that mean? Well, we already determined that the money that we put into this policy, so all this money over here, you see how it grows every single year? It's growing because of these annual dividends. Okay, we went over that. It's growing because of these annual dividends. And even if it didn't, you can see right here, this is not including dividends over here. It still grows. All right. So this policy is going to grow every year that we own this thing regardless. Now, So and again, it's guaranteed growth. It's in the contract. So somebody before mentioned tax free. Okay. So all this growth within this policy is tax free growth. So all that in there, we'll never pay taxes on any of this growth. So as we put money in this policy and we get this incredible growth on this thing, we never pay taxes on any of that because it's within the policy. All we can do though, and then when we take the money out to use for other things, because it comes out in the form of a loan, are we paying taxes on that? No. Now, if I take that money and I go invest somewhere and make great returns, that is taxable income. But the money within the policy and the loans that come out of that policy are completely tax free. How about the death benefit? Is the death benefit taxed when it gets paid out to your beneficiaries and loved ones? No. The death benefit is going to be tax free to your beneficiaries as well in most cases. All right. So you have all this tax free growth. All right. So now we have money going in. We have guaranteed growth, guaranteed tax free growth. And then here's the kicker of all this. When I put money into this policy, in this example right here, $150,000 went in the first year. Okay. You can see over here net cash value. Again, what is this bucket right here? This is how much we have available to take out for a loan. Now, is $132,000 $150,000? No, we have less money. Why? Because that's the cost of the death benefit. That's the cost of this policy. So it takes us a little bit. We're going to be down a little while before we start taking advantage of that uninterrupted, guaranteed, tax-free compounding growth. Because you'll see right here, what happens in year 3? Look at that. What's that number right there? 50,614, right? How much did we put in contract premium that year? $50,000. So we put in $50,000, the policy grew by $50,614. Look what happens in the 5th year. $50,000 goes in. How much does the policy grow by that year? $56,595. So we put 50,000 in, we could pull 56,000 out. So you start seeing what's happening. We're going to be down in the first few years to do what? To be able to increase, guaranteed, pull more and more money out than we put in every single year for how long? For the rest of our lives. If I was to show you the next page of this illustration, it keeps going all the way to 121 years old. And you'll see the cash continues to grow every single year for that amount of time. The death benefit grows and so on and so forth. So it keeps getting bigger and bigger. All right. Now, one other thing I wanted to mention on this contract premium. I said before, she could put up to $50,000 a year into this policy, right? Up to 50,000. Does she have to put 50,000 in? No. See, these are very, very flexible. Her minimum on this policy is this number down here. And I could show you exactly how this works and stuff, but I just want to point it out. So as long as she puts in a little over $17,000 each year, she's good to go. This thing will keep rolling along. And then in the later years, we have people all the time that start using these things for retirement. We can do what's an RP called an RPU, a request for paid ups, where the policy starts funding itself. We can start taking loans out. We start using, we start cashing out. There's so many different things we can start doing with these things later on. They have tons of flexibility. And even if you start putting in less money in these years, then you start doing well again in later years, you can oftentimes make up for it and get additional money into this policy in those later years. So we have a lot that we can do. Now, the one thing we cannot do with this, though, is put more than $50,000 a year into it. So in this policy right here, for example, 50,000 would be the max in those years. So what happens in year 4 if this young lady, if she's like, hey, I love this, I want to start putting more than $50,000 a year into it. What happens then? Well, that's when she starts opening up additional policies. So you can have as many of these policies as you qualify for. I think Brent Kessler's got like 24 of them now, something like that. I know Chris is running up on 15, 16. I don't know how many now. I've got a handful of them. You just keep adding them as you grow financially. And that's the beauty of this. That's how you start growing your banking system. All right. So I hope some of that stuff made sense right there. So let's go back to this whole life policy real fast. All right, so this mutually owned whole life policy. Now, there are different types of life insurance policies out there. I mentioned term insurance a minute ago. Right now, there's a lot of noise online, on social media, and in this industry, people that are selling what are called IULs or VULs, index universal life or variable universal life policies, things of that nature. I just want to be very clear. Never should the infinite banking concept be used with an IUL. In my veins, I guess, so to say, you could call me a salesperson. I've worked many sales jobs over the years. I've trained with many salespeople, sales trainers over the years. I've taught sales occasionally over the years. When you become a good communicator and you really understand something, you end up just, selling it, so to say, all the time. You kind of can become a salesperson. And so when it comes to IULs, the way I always like to say it is you can make them look amazing. IULs typically have very high commissions. That's one of the reasons agents and advisors love to sell them. They make a lot of money on them. See, when I just showed you that illustration, that $150,000 and that $50,000 a year going into that thing, we get paid very, very little. We get paid like 70, 80, 90% less than what a typical whole life policy would pay out, and sometimes 150% or less than what an IUL would pay out with the same funding amounts. We give up a lot of our commission, which is a lot of the cost that's involved in these policies. We give up a lot of that commission so that we can give you the advantage. Because when she was putting that money into that policy, when you put money into a policy, when can you start borrowing that money right back out? Well, with a traditional whole life policy, it can take 10 to 15 years before you can start borrowing that money out because there's no cash value in there yet. When we build these, we build them for maximum cash value immediately. And so when immediately within 30 days, she can start pulling most of that money out of there to use via loan. So the money's available immediately, and we got to give up our commission to be able to do that. But IULs, I'm telling you, I could sell the hell out of IULs because you can make them look beautiful. But in reality, they never end up performing the way that they're sold. They never end up performing the way they're illustrated. Typically the cost of insurance on them increases each year. If there's low market, sure, there's a floor in an IUL. You can't lose money, but increasing cost of insurance each year, somebody's got to pay for that, which means it comes out of your pocket or it comes out of your policy's cash value at the time. I've seen so many of these things lapse. We have open challenges out there for people to show us an IUL that actually performed the way it was supposed to, and we've never had somebody be able to show us one that does a good job. And so never stay away from that stuff. This is your warning right now. I'm happy to share with you a bunch of videos that go into detail on that. Just want to be very, very clear to watch out for some of the noise and what's being said out there, because as a salesperson, I see right through it, and as a professional in this industry. So we want to keep in mind, we only use whole life insurance policies. And I think it's also important to understand a little bit more about whole life. And so we want to start looking at the banks, right? If we want to become the bank, how do we start mimicking what the banks do? Did you all know that over 90% of the M1 money supply at these banks, is put into two different assets? Do you know what these assets are? Bank-owned life insurance. Banks are the number one purchasers of whole life insurance in the entire country. If you've ever wondered why everybody that works at a bank seems to be some kind of executive or director or vice president, it's because it gives the bank an insurable interest on that individual, and they buy life insurance on those people. All of them. Banks put all their money in life insurance, and you guys know the second spot? Real estate. Banks buy real estate. Banks lend on real estate. So banks are putting their M1 money supply in life insurance and real estate. So if I want to be the bank, does that make sense? That's maybe what we start doing as well. What do you think I do? What do you think Brent does? What do you think Hannah does? What do you think Chris does? We put our money, we change one thing, put our money into this policy first. We immediately take that cash value out and we start putting it into primarily real estate right now. Again, I'm not giving you financial advice. You got to learn anything you ever invest in, know, like, and understand it. Become an expert in it first. Do your due diligence. We can help you with all that at Private Money Club, privatemoneyclub.com. It's why we started Private Money Club, to be able to educate and show people how to flow money through real estate using these policies. So it's a beautiful thing. But if we're going to be the bank, does it make sense we start acting like the bank? And that's exactly what we're doing here with whole life insurance. All right. And we're not the only ones. I mean, whole life insurance has become one of the top ways to pay high paid coaches, high paid talented leaders and executives. This was back from 2016, but Joe Harbaugh became one of the highest paid college football coaches, and a huge portion of his package was life insurance. Politicians, Walt Disney World, Pampered Chef, Doris Christopher, Ray Kroc with McDonald's, people like the JPs, the Morgans, the Rockefellers. The list goes on and on and on. And again, this concept, using whole life this way, storing wealth, you taking advantage of uninterrupted compounding growth, it's been around for over 200 years. So this is nothing new that we're teaching. It's just something that maybe you've never learned before. All right. And so we want to start really understanding how banks operate, how banks work. And this is what we'll start teaching you in that 90-minute presentation. Again, I don't have time to get into all of this today, unfortunately, but this is what we want to start doing. We understand why we want to become the bank, why we use the vehicle that we use in a whole life insurance policy, and why we're going to start mimicking what banks do because they know how money works. So we want to do exactly like banks do. Yeah. So with that said, I will show you this one example on using that illustration I just showed you in just a second, but we want to understand, how we're moving our money. So like I said before, we put our money into the policy. It does two things for us, okay? We put our money in there. It gives us compounding interest. And Albert Einstein actually coined this term. Albert Einstein called compounding interest the eighth wonder of the world. Those who understand it use it. Those who don't pay it. So when we put our money in that policy, remember that money, it's in there. It's guaranteed, tax-free, compounding, uninterrupted for the rest of our lives. Simultaneously, we can borrow the money out and do what with it? Get that money moving. Remember how to avoid inflation, avoid volatility, avoid all this stuff? We want our money in smart places, making more money for us at all times. The reason we use a whole life insurance policy is it allows us to do both of these laws right here simultaneously. Simultaneously. It's a wonderful thing. So let me show you that a real world example real fast. Okay, so here's that illustration. I just explained all about it. Over here on the net cash value side, let's see, let's say that she puts money into this policy and immediately takes the cash value out every single year. Guess what? Whether she does that or not, this policy is going to look exactly the same. Why? Because it's uninterrupted compounding growth. Because when you take the money out of this policy, you're not actually taking the money out of the policy. What's actually going on is you're using your whole life policy as collateral. And the insurance company is actually giving you a loan on that collateral, on your policy from their general funds. So your money remains in the policy, compounding and growing all times. You're just using it as collateral to borrow from the insurance company's general fund to then use that money. And they let you borrow up to, guess how much? The amount of cash value that's in the policy. Exactly. So it's a beautiful thing. It allows us to do both things at one time. So let's say that this investor, and this is very, very common. In fact, is there anybody on here that's done this transition yet besides myself? Where you started as an active real estate investor and now you've transitioned to become a passive private money lender. Has anybody else done that already? I know tons of people that have done that already. And it seems to be a very common route to become a private money lender because you understand real estate. To actively go out there and do it takes a lot of time, right? You're trading hours for dollars on the active side. But eventually you want to start continuing earning and growing wealth and generating income for yourself without trading the time and the hours. So private money lending on real estate, collateralized real estate deals is one of the best ways I've ever seen to do that. All right. So here's the difference though, using this policy. So in the first 8 years, she actively does real estate. Every year she puts money in, she pulls that cash value out. She uses this policy for active investing. In the 8th year, she wants to get out of active investing and do a private money loan. Awesome. So in the 8th year of this policy, the increase in that cash value was $66,722. So that year, she put in $48,594. All right. So she puts in $48,000. Immediately, the policy grows by $66,000. That is $18,000 in growth or a 37% cash on cash return on your money that year. Okay. Now, what does she do? She immediately takes all that cash value. She finds a deal on Private Money Club in a first position that pays 12% annual return, and she lends her money out. Okay. So now she's earning 12% on her money this year. She earned 37% within the policy growth on her money. She had to pay the insurance company 5%. And right now the rate's between 5 and 6. I think some of the Lafayette's are at 7. At the end of the day, it doesn't really matter. It's not going to make much of a difference. But you do pay the insurance company some interest to be able to take that loan and use it. But is that okay with you? Because what do we just accomplish right here? If she would have borrowed the money for the private money loan from Wells Fargo or Bank of America, what would have happened? She would have earned 12%. But when she takes the money out of Bank of America, is Bank of America still paying her interest on the money within her account? No, because that money's gone. But what about this policy? Remember, this money that's in this policy, when she takes it out to use it, is that money gone? No. She's borrowing against the insurance company's general fund, so her money remains in their compounding. So this allows her to earn 12% on the private money loan, as well as the 37% within the policy. Now she is paying 5% to use that money. So that year she earned a 44% return on her money just by making that one change 8 years earlier. Instead of continuing to put her money into someone else's bank, all she did is she started to put her money into her own banking system. And this allowed her now to be able to compound her money over time, multiple ways, and make much better returns and grow her wealth that much faster. And at the end of the day, that right there is the base, the foundation of how the infinite banking concept works, especially when it comes to growing wealth. And guess what? What happens each year in that policy? One more time. What happens after the 8th year? The 9th year, it's a $69,000 increase. The 10th year, it's a $72,000 increase. Look at this down here. The 15th year of this policy, she's 55 years old. She puts in $17,500. The policy grows by $54,000. What's the math on that? Anybody do the math on that real quick for me? That's probably 200% cash on cash return. And what does she do? Nothing different, but made one change 15 years earlier where her money started going first. That's it. So again, schedule a call with our team, guys. This is what we're going to talk to you about. What's the right amount to put into your policy? How much should your contract premium be? Right? Here's one we did for a younger guy. He put $50,000 in up front. You don't have to do that. You can start with just your monthly amount. If you want to do $491 a month, great. Our guideline minimum, what we would recommend, 10 times your age on a monthly basis. 10 times your age on a monthly basis. So if you're 42 years old, $420 a month. That'd be a guideline minimum. Now you'd want to probably put in more, but we can talk to you about that. What makes sense for your financial situation? This guy was doing $491 a month. And you can make that premium deposit. You can pay it monthly, quarterly, biannually, or once a year. And that can change over time. Again, these are very, very flexible. So it gives us a lot to work with right there. Yeah. All right, cool, guys. With that being said, hopefully that clears up some stuff about why we use the vehicle that we do, why we use the infinite banking concept to flow our money through first. Again, I'd love to show you those examples on the 90-minute video. So schedule a call on the link over there with our team and watch that 90-minute video before the call so you have a full understanding. But I do want to answer your questions now. I know we're already at 2:30, but can you guys stick around with me a little bit longer? I'll answer these questions for you. Is that all right? Preeti, we can do this in Canada. We just got to connect you with our infinite banking team in Canada. So if you send me an email, I can connect you with our Canadian team up there. Again, it's snaggy@chrisnaugle.com or whatever email you have for me. All right, so Moni, okay, I think I answered that one. Ron said, my wife bought a car last year. I don't like the interest rate. Replacing her loan with a BYOB would make sense, wouldn't it? Yeah, absolutely. Ron, for sure. For sure. And we can build out that whole plan for you. By the way, what I didn't show you was any of our BYOB tools. Some of the tools that we use for you. We have software that we use. And so if you're paying off debt, we show you and we run different strategies for paying off debt, but we'll show you exactly what to do. So you literally just follow the plan that we create for you. If you want to pay off a car or buy a new car, we'll create the plan for you exactly how to do that. And all you have to do is follow the plan. Now, the cool thing is if the plan, something happens with your plan, life gets in the way, something unexpected happened, guess what? We'll just redo the plan for you. We'll create a new one because who's in control of all this? You're in complete control. Hey, Ron, let me ask you this. If you stopped paying your car loan right now, what would happen? The car you bought your wife last year. If you stopped paying for it, what would happen? You'd look out the window and there would be a tow truck in the driveway, right? Repossessing that thing. Well, if you take a loan from your policy and you're paying yourself back, just like the bank, like we recommend, but something happens and you stop making that car payment back to yourself, what happens in that case? Nothing. Nothing at all. You are the banker. You are in complete control. Now, if you want to repo your own car just for fun, go for it. But you don't have to. It's up to you. You're in complete control. So if you want to say, hey, don't worry about making payments for a couple of years, just start it up again later on when you're ready, no problem. You got to look at yourself in the mirror to do that because you're the banker, so you're talking to yourself, but that's the way it works. You're in complete control. And by the way, if anybody does have to hop off and I haven't answered your question yet, we'll be back at 4:30 Eastern. You can watch on YouTube. You can watch on my Facebook page. You can watch online on any of our YouTube channels, but we do live stream every Wednesday, what we call Ask Me Anything. So it's 1 hour every Wednesday at 4:30 Eastern. So come back if I don't get to your question or you got to hop off and you can ask your questions there. Yeah, you want the resources again? There you go. Digital books. All right. Donna said, for later, I'm interested in pulling out equity from an investment home. Capital gains is too high to sell. Yeah, absolutely, Donna. Get a HELOC on that thing, do something like that. You know who's really good at that on our team is HELOC Joe. I'd probably recommend setting up a call with Joe if you haven't already worked with somebody on our team. But if you shoot me an email with what's going on, I will connect you with the right person. Let's see, Troy Young. Troy Young said, I've been giving my current agent a chance to set me up with IBC. Troy, most agents are not going to know how to do this, even if they say they are. If your agent's not actively doing it in their own lives every single day, keeping up with what's going on, and they're not there to actively show you how to use it with a plan, with software, with numbers, go with the experts. Why not? I mean, this is all we do all day, every day, and we don't even charge for it. So that'd be my recommendation. But he said, I live with my daughter, family, my agent had me set up with foresters, Utah. Love Utah, one of my favorite places in the country. No, you can be the owner of the policy. You can own the policy on your daughter and be the one that owns it and controls it and everything else. That's no problem. We do that all the time. You know, if you're somebody that has bad health, you're, in your 80s or whatever the case is, you can't qualify, you can still own a policy. You just got to put it on somebody else's life. No problem. We do that all the time. Yeah, we can take care of you, Troy. Just schedule a call with us. No problem. Dell, as an agent, can you sell policies to family members? Can help manage policies? Yeah, Dell, you can. It depends. If you're already doing infinite banking in your life, we do partner with agents in certain situations. So if you want to reach out, I put the link over here if you want. If you're an agent, let's see if this is right. If you're already doing infinite banking, you can fill out that form and we can kind of share a little bit more details with you if it's a fit. Yes, the replay is available, I believe, I don't know, Saturday on the YouTube channel. Where's the info for Money Multiplier? What info are you talking about? TheMoneyMultiplier.com? I don't know. Jacob said, so you can earn interest on your money even when you use it. Yep, 100%, Jacob. The money goes in there. It's always going to compound and grow for the rest of your life uninterrupted. Even when you pull that money out, because you're pulling it out via loan, all that money stays in there growing for you at all times. What mutual companies are best? One America, Lafayette Life Insurance Company, Securities Mutual Life, possibly Mass Mutual or Guardian in certain situations, maybe even Penn. But One America, Lafayette Life for the majority of our policies, followed by Securities Mutual, and maybe Mass and Guardian. That's what we have found are the best of the best out there. And we're always looking, we're always interviewing new companies to use. Those seem to be the best. What's the benefit between this whole life and the other BYOB index? Yeah, index life's garbage. Preeti, if you could just email me whatever you need. I'm not going to read all through that yet. But if you could send me an email, I'll help you out, whatever you need. Mike said, in the exhibit you shared, what happened to the death benefit in year 8? Oh, great question. So he was asking about the death benefit. So you see over the death benefit in year 8, how that drops. So when we design these policies, there's another bucket that I didn't really talk. So let me explain it this way. So when the contract premium is broken up into several different pieces. So the contract premium consists of what's called the base premium. It consists of what's called PUAs, which there's different types of PUAs. It stands for paid up additions. But basically, there's SPUAs and LPUAs, and there's different names of different carriers. But basically, the base premium is what a standard whole life policy is built off of. And then the PUAs are the rocket boosters that kind of get this thing to become very, very efficient and give you all that cash value up front. So in this policy right here, just as an example, $17,500 is the base, which means about $32,500 is PUAs, which isn't quite right. It's actually about 36,500, about 36,000 is PUAs. And then there's another about $1,500 a year in this policy that's term insurance. Remember how I said before we take advantage of term insurance? Maybe I need some cheap death benefit to cover a mortgage or something like that. I could buy a term policy, something like that. Another thing is we use term insurance every single day to build these policies because when we build these to become efficient as possible, we want to max them right to the MEC limit. And one of the things that we do to avoid MECing the policy in the early years is we use term insurance to support the death benefit, to support the premiums that we're putting into it. So I know that's a lot to say right there, but this is what we're always tweaking with. So when we design these policies for you, you're going to hear different terms like, oh, is it a 60-40, a 70-30, a 90-10, whatever that might be. What we do is we're going to say, all right, what problem are we solving for you? Do you want more death benefit? Do you want more cash value immediately? Do you want it now? Do you want it next year? Whatever that is. And then we're going to put the appropriate amount of term base premium, PUA premium, and term premium to make it the most efficient policy for you as we can. And so what you're seeing in this example right here is that in year 8, that's that term insurance dropping off. Okay, so that's when that term insurance drops off. Now, when the term insurance drops off, the death benefit drops off as well with it. Why? Because that term was buying more death benefit. But again, the term is pure cost, except there's no cost in the absence of value, right? And so we're only using that cost until we don't need it anymore, and then we're getting rid of it. Does that make sense? And then you'll see in the premium, the PUAs eventually are going to fall off as well in year 11 here. And that's why it drops down to the base only. And we do that because the PUAs are simply not needed anymore. Now this policy is growing on its own. I mean, look at that growth over there, growing by 45,000 a year, 47,000 a year, 49,000 a year, 51,000 a year. We're only putting 17.5 into it each year, but look at that growth. So we don't need the PUAs anymore. So now we can clear up that, might start buying more policies, growing our banking system, things like that. Hopefully that answered that question there, Mike. Great question, though. Thank you. I forgot about that earlier. Are we able to open a second policy? Yep, you can open as many policies as you want, as long as you qualify, and that's how you build your banking system. Frank, thank you. How much does your team charge to set up an individual? We don't charge anything. We make money through the insurance company. Like I said, it's a reduced commission, but that's how we operate. Can we start playing? Example, 26 years old, 26 a month, 260 a month. Yeah, whole life insurance. That's right. How do I get an illustration? Schedule a call with our team and we'll build all this out for you. Plain and simple. Very, very easy. Just schedule a call with our team right there and we'll handle it all. Please provide the link for a housing crisis replay. It's on YouTube, Robert. I think it was like video from a few days ago. Mike, thanks, man. Angela, IUL, goodbye. Yep. Herminio, so how much additional PUAs can a person purchase? Pups can a person purchase? It depends on how it was designed up front. So it just depends. We need to be able to design it. So you tell us what you want to do and we'll design it properly for you. Rocio said, then at what point do you get another policy? You get another policy once you have more money than you could fit into this policy. So just using this example on the screen right here, if you have $50,000, you can put into this thing each year, but you want to put 75,000 a year into it. You have this policy with 50 going in, and then you'll start a second policy with 75,000, with 25,000 a year going into it to create that 75 total going in. So once you max out your existing policies, that's when you start putting up more policies. The largest policy available depends on your financials. So we do multi-million-dollar policies for people all the time, for very high net worth individuals. All right. The term boosters. Yeah. Kiana, what question did you ask that I did not answer? Sorry, I'm missing this over in the chat box. Let's see. How did you get 37? How did you get 37%? Sorry, guys. I was answering questions from the Q&A box. The chat box is hard to keep up with sometimes. But George was saying, how did you get 37% in the example? That's because that year we put in $48,000 and our cash value grew, our policy grew by $66,000. So if I do the math on that, I put in 48 and I grow by 66, that's $18,000 in growth. So $18,000 is basically profit. It took me $48,000 putting into that policy to get that 18,000. That's, if you do the math, that's 37% return. So hopefully that answers your question. To get started with any of this stuff, you just schedule a call with us on that link right there. No, you can open more on yourself. You can, so I think I own 5 policies myself. Chris, I think, owns 12 or 13. You can have them on other people's lives too. So one of my policies I own is on my son, one on my wife, yeah, that's right. So you can own them on other people too. So it just depends on what you're trying to accomplish and do. Policy is considered maxed out when you can't put any more money into it, if it'll mech it. What if I have my co-op paid off? Yeah, I'd schedule a call with HELOC Joe. He's really good at showing people how to use equity to create these banking systems and then move the money. So if anybody wants to, if you guys have any specific requests or want to meet with somebody specifically, just send me an email and I'll put it over. Just send me an email if you need anything at all, guys. This is all I do, again, all day, every day, is I help facilitate all this and manage all this and and all that good stuff. So in this situation, it would benefit us to put our earned income directly into a policy rather than our bank account minus expenses for bills, rather than any leftover monthly. Should we do? Yeah, anonymous. Basically that's right. I mean, and then eventually you can start flowing more of your money in and using that for more of your bills and expenses. But you can look at this today as more of like a glorified savings account on steroids that does a lot more than a savings account would typically do. There's nothing wrong with looking at it that way to get started, for sure. Baby steps. I've always said you got to crawl before, you got to sit up before you crawl. You got to crawl before you walk. You got to walk before you run. But then you can take off and do marathons and ultras and everything else. So you got to start at the beginning. All right. All right, guys. Well, I got to run to the next meeting here, but I appreciate everybody being on. Thank you for being here. Like I said, if you need anything additional, just shoot me an email. Otherwise, we'll see you guys at 4:30 or be right back here next Wednesday on another wealth webinar. Have a great day. Thanks. Bye.
All right, so I hope you guys enjoyed that episode. We're putting up tons of them, but I think if you like this one, you'll probably like that video as well. Not only that, I've got a book that I created, Mapping Out the Millionaire Mystery, where we actually show you what the wealthy do in the game they play with money. I want you to have that for free. And if you want to know about all my new videos coming up, click that alert button. Actually, smash that alert button, and you'll be notified every time we put a new video. So we'll see you on the next episode.